Crypto can be very, very volatile, but the gains can also be exponential. And if the cycles do play out like they did in 2013 and 2017, then we might be getting a top in the next couple of months. So what I want to do is go through my exit strategy, as well as showcase some tactics and other strategies that people could use if they were looking to exit out of these positions in crypto. This is going to be my ultimate guide in terms of exit strategies when it comes to cryptocurrency. So definitely kick back and let's dive in. Hey guys, my name's Ravi and welcome back to Personal Finance with Ravi Sharma. If you're new here, smash that subscribe button because I talk about real estate, cryptocurrency, and financial freedom. Now, if you are interested in cryptocurrency, then definitely go check out the playlist I have for cryptocurrency related content, whether it's buying crypto for the first time on an exchange, whether it's going out and buying NFTs, or everything in between. Now in this video, we're gonna jump into my whiteboard shortly, where I'm gonna showcase what options we have with crypto and what we can do as part of a strategy. So many people I speak to don't really know why they got into crypto. They don't know what they're gonna do with it. It's important having a strategy. So this video could hopefully allow us to understand what options we have. Now, before I continue, with so much happening and things moving so quickly, I do have the Patreon community that I urge you guys to join if you are after more time-sensitive content. At the end of the day, I record these videos a couple of days before, edit them, and then by the time I'm uploading, it could be a few days before that happens. So if you want to get up to date with real estate content, as well as crypto and NFT stuff, then definitely join Patreon. There's a link in the description below. Now let's dive into the whiteboard. So effectively, we're looking at exit strategies, right? And what we're going to cover in this video is going to be the investment strategy. We are also going to cover the selling strategy, the exit strategy, and my strategy. So let's jump into the investment. Now there's really two main thoughts here, which you have is the HODL, or you have the trading. Now, what does this mean? Well, the HODL bag is basically going out there, continuing to DCA into projects irrespective of the price. But I actually have a video of how you can do this on autoplay and how you can do it on Australia's most trusted exchange. Definitely go check it out. There's a video up here and there's a link in the description below to CoinSpot where you can actually get $10 of free Bitcoin just for signing up. So here we are basically DCAing into the market, right? So dollar cost averaging into the market to say, well, I want to hold these actual projects for a long term and I don't care about the price. I want to go in, continue purchasing time and time again. I'm accumulating here. I'm not interested in selling, and I'm just interested in stacking my stats or going in and building my projects in my altcoins. With your trading strategy, you're really looking at, am I doing a day-to-day trading? Am I swing trading? Or am I timing cycle trading? Now for me, I would probably be in the boat of cycle trading. What does that mean exactly? Well, it's essentially going, I know that the cycles play out every 4 or so years. We go in, we buy in the bear market where nobody's looking, and then we go and have a couple of years of bullish sentiment where the prices start multiplying quite exponentially. So for me, I'm interested in how do I purchase during the lows of the market, then go ahead and then sell at the top of these markets. So if we were to look at the last cycle and how that played out, we would be able to sort of figure out what trading actually looks like. So if we went and looked at the last cycle, we peaked in 2017 to 2018. So it was basically about December to Jan. And then what we saw was the graph sort of go like that, and then it came all the way down. Now, if we were looking at this, we'd be at, say, 2018 there, and now we were probably at about here on 2019. So essentially, if we were to look at trading and effectively how we wanted to do this, we aren't really looking at how do we purchase up here. What we want to do is we want to be purchasing when nobody's looking, which is basically about here and here and here, right? So this is very important to know and to keep in mind, because we will see cycles, whether it's crypto, whether it's real estate or NFTs, they all have cycles. So we want to be purchasing when most people aren't looking at the space versus when most people are getting very greedy. Next, we look at our selling tactics. So there's really two options here, right? We can DCA out, and I'll explain what that is, or we can time the market. So this is very similar to when you're actually going ahead and purchasing, getting into the market, so you're DCAing in, or you're looking at saying, well, I want to buy at the lowest period. So I'm going to illustrate that in this little sophisticated graph I've got here. So if we go and say this is the actual market and it went up like that and then it's going up like that again, right? When we DCA in, we could purchase there, we could purchase there, and we could purchase there, and we could purchase there. Now the thing is, we are going to end up having an average price because we've purchased at 4 different locations or periodically. Versus if we looked at, say, timing the market, that would be where you are actually going in and saying, well, I want to be purchasing in this zone here, which is the lowest period to actually buy. To actually get in here and here, it takes a lot of time, but also a lot of luck, to be honest, because nobody really knows when the low of this market is, and nobody really knows when the high of the market is. So instead of trying to hope that we can buy here and thinking, okay, well, I'm about here and I'm hoping that the market sort of comes down here and I can purchase more when it's lower. Well, what happens when we start moving up? Well, you've missed your chance to actually go ahead and buy. Now, if we use the same example, that's for more so buying. But what happens when you're actually selling? Well, ideally, you want to be selling right at the top, right? But in order to do that, it is quite difficult. So we are trying to go, how do I sell at that top and how do I sell at that top? But to actually time the market is quite risky because if you think, oh, I'm just going to sell here and then come back and buy here, it is actually very difficult. So if you are hoping that this is the top and you sell, well, good luck to you and awesome work because you nailed it. But what happens is when you get here, you've got emotions, right? That the market could go even further. But in fact, it starts going down and now you're selling anywhere from here to here and you missed out on all of these gains. But instead, if we actually go out and we DCA out of the market, we're probably selling here, we're selling here, we're selling here, and we're probably selling here, which means your average price again is a lot higher than what your average price could be if you try and time the market up here. Because if you miss this, you're probably going to sell here, and that's going to be much lower than what that actual value could look like if you DCA'd out. Next is exit strategies. So there's really 4 exit strategies that I want to cover off, and that would be hold and stake. We could borrow against our crypto. We could use the profits and buy, say, real estate, or then you have selling the crypto and going into stable coins. So what are each of these exit strategies? So hold and stake is essentially where you're going ahead and buying these, projects, you're buying your Ethereum, you're buying your Bitcoin, and then what you're doing is saying, look, I don't care about what the price is. I don't care about selling. All I want to do is keep accumulating, and then in 10, 15, 20 years time, I'm hoping that the price of these projects and assets are going to be way higher than what they are today. Essentially, instead of just holding them like that, we can now stake them, which is basically earning a yield or interest or dividend payment on the actual asset I own. Now, this could be anywhere from 5 to 7%. In some cases, could even be as high as 10%, depending on what your asset actually is. Now, when we go into borrowing against crypto, that's essentially where we hold our crypto and we can put it into a crypto bank, so to say, and you can borrow against it. So think about something like real estate. You go ahead, you purchase a property, you can go to the bank and say, well, look, I'm going to give you my property, the title, and I want to borrow, say, 50% of the total value of this house. So let's illustrate what that actually looks like. In traditional finance, we're basically going, this is my property, right? And the value is, say, 100K. I want to borrow against this property. So let's say I'm going to borrow at a 50% LVR. That would mean that I can take out $50,000, tax-free. And now I can go and say, buy a car I can go on holidays. I can pay bills. And the same thing would apply if you had, say, something like Bitcoin. You could do effectively the same thing as what you did up here. It's the same principle, but let's say it's 100K worth and you borrow against it at 25%, you would have equal to $25,000, which you could then use to do what you like. Now, the third exit strategy is using the profits to then go ahead into a different asset class like real estate, and now using those profits to purchase more real estate. So an example of this would be if you went ahead and you say made $200,000 in gains, you obviously have your capital gains tax and things like that, but then you're able to use those profits as a deposit to go and purchase real estate. The reason why some people do this is because they're like, well, crypto might lose its value up to about 99%, just like similar cycles before, and I don't want to do that. So then what they do is they use the profits there, bring it into real estate, which is traditional finance, and they know long-term history, have that conservative approach, and they realize those gains. So that's something that people will do as well. Now, the final one is you sell your crypto and you go into stable coins. What are stable coins? Well, there's like USDC, there's Tether, there are so many out there now, but essentially it's pegged to a currency. So it basically is $1 for $1 on a stable coin. And why we do that is because it still sits in crypto, right? It doesn't come back into fiat, and we can go ahead and actually stake that and earn a yield on the stablecoin. Now, why would we do that versus holding our crypto and staking that? Well, essentially, if you're holding your crypto, if your value of the crypto is, say, Bitcoin is worth 100K, the market could actually fluctuate. So it could go down to, say, $50,000, or it could go up to $150,000. Whereas with the stable coin, we are relying on the fact that, hey, I don't really want the stress of the actual asset going up and down. I just want to earn the yield and have it sit there while the market calms down and cools off. So that's the final one that you could look at doing. Now, before I jump into what my strategy is, if you have enjoyed the video so far, drop a like for the video and share this with someone that is also trying to figure out what they're doing in crypto, because it is very overwhelming and very challenging to know which move is the right one. And finally, my strategy. So what am I looking at doing? Well, the thing is, I am planning to sell my crypto. So 99% of my crypto I'm going to sell. But what strategy I'm using is actually going to be a DCA method out of the market. So as I explained, nobody knows when the top of the market is, how high it's actually going to be. So I would rather go in and sell proportionally as the market goes up. And obviously I talk about this in great detail, daily updates, sometimes hourly updates when things get crazy in the Patreon community. So if you're waiting for just these videos to come out, I could probably have already sold most of my crypto. If you're interested in what I'm doing personally, that's where I'm talking about it with updates. The other thing I'm going to be doing is I'm going to use my crypto profits, and I'm going to use that and go into more real estate because I love real estate, obviously. And the reason I'm really doing this is so I can take advantage of using the crypto profits and then realizing that by buying real estate, which I know in terms of cycles and how it's placed in the market with cheap debt as well as demand and supply constraints, I know what I'm doing with real estate. So if I can take out the profits that I have with crypto, bring it across into real estate, purchase again strategically, get the cash flow, but get the capital growth as well, then I'm realizing the gains upon the gains that I wasn't going to get traditionally. And finally, I'm going to use and stake a portion of the crypto in stable coins. And why I'm going to do this is because I still want to come back in the bear market. I still want to go ahead and purchase again in crypto because I think it is the future, and the gains that I can get from crypto are, not going to be comparable to anything else. So I want to hold my real estate with some of those profits. And then after that, what I want to do is I want to use some of that profits and go into stable coins, earn that yield and have it already sitting in crypto, which allows me to go ahead and purchase again. And this is basically where I'm trying to go, well, if this is the top of the market, and then we're going to come back up for the next cycle, well, we might be here at 2021, say 22, right? And instead of going out there and say, well, I'm going to hold and hodl here, right? I don't want to do that. So what I could look at doing is I'm going to actually sell here, and sell here, right? That allows me to have those profits. It then means I can go ahead and then say buy real estate at that point. Then what I'm going to do is, because I've got some of my crypto in stable coins, then I'm going to go in and then I want to start purchasing here, here, and here. And that allows me to have all the gains from here to here. This is what I want to be looking forward to, and we don't know when that's going to come, how quickly and how exponential that would be, but that's essentially the plan that I have for myself right now. Now, I know this has been a long video. I just want to bring you guys context and value with what I'm presenting to you, but also don't take this as financial advice. Start making your own decisions and doing your own research. Crypto is an awesome space to be in, but so is real estate, so are ETFs, so are collectibles, and you need to figure out what is in line with your own risk appetite. If you need the help, there's a link in the description below. Join the Patreon community. You can get the daily updates. But if you are looking at doing this yourself, please spend some time getting educated. Whether you come in now, whether you come in 6 months or in 3 years' time, it really comes down to you putting in the time of being active in the market and using the velocity of money concept, as I've spoken about in numerous videos. Go ahead, check out those videos that I've made over the past year and a half, and I'll catch you guys in the next one. Thanks, guys.